Welcome to the Greater Central Florida Multifamily Investor Group, where we focus on investing where it makes sense. Here's your host, Ismael Ray Reyes.
Welcome everyone to the Greater Central Florida Multifamily Investors Group. What we do in this group is focus on learning and helping each other do deals, multifamily deals, and we're going to get a little ambitious and look at some mixed use today, which is a little bit different, but you know, there aren't too many vanilla value add deals left. Everyone's kind of chewed those up. So we got to look at ways to go a little bit broader on our look, you know, whether it's a different class or something else. And that's part of what that is. Ultimately, what this group is about is investing where it makes sense. And we hope that's Florida. A lot of people coming down to Florida. There's other places, and Cherif will talk a little bit about Puerto Rico and what's going on in Puerto Rico and other places. So we just got to keep our eyes and ears open to opportunities, because when everybody knows about them, it's probably already too late. Take a few minutes, and this is hard to do because a lot of experience here. So Cherif, I tried to take your intro and make it brief, but please, you know, I'm hoping that you can, you know, obviously you got all the time in the world. We got good 30 minutes of discussion plus Q&A if you need it. But I'll go ahead and kick that off with I think some key nuggets here. You've invested over $100 million in real estate assets since 2009. You were one of the first people to file a Regulation A+ with the SEC and successfully created a fund that can solicit publicly to the broadest base of investors, whether accredited or non-accredited, offered by a private fund. You've been consulting and sharing wealth secrets with investors since 1999 and have offered several best-selling real estate books and taught thousands of people your system of investing in commercial and residential properties, and how to raise capital and syndicate deals. Some of us have done that, but it's always good to have, you know, to see other people and see the breadth of that experience as well. Cherif, you live in California, where you teach wealth programs and actively invest in high-end residential and commercial projects. You travel between Puerto Rico, where you have $50 million in historic commercial properties. Puerto Rico's my home, so it's always good. I go down there every once in a while, so that'll be an interesting discussion. And then also you spent some time in Cancun. I've seen some of those photos, very nice. So, and you enjoy the life, a great life with your wife and 2 children. So Cherif, that's just a small sliver of what you can talk to us about. And I'm hoping you'll share more. So I'm turning it over to you now.
Thank you so much for this great introduction. I'm really excited to be here. So I'm going to go right into it. And I'm going to talk first about retail buildings. And some people hear the word retail and they think I'm crazy. Retails, everybody's shutting down, shopping malls, etc. That's not what I'm talking about. I'm talking about single tenant retail, standalone retail. And then I'm going to tell you how that works with multi-unit. Be the judge to see if it makes sense. Are you ready? By the way, I am in my office in Puerto Rico. I just arrived a few minutes ago. So here's my office there. I have my little light to look good. And so I do some trainings here, meet with bankers and whatever here. So, and I have my apartment back there, so it's very convenient. But
it's Old San Juan, right?
That's Old San Juan, yeah.
Oh,
Ray, when
nice.
you come, you walk in, you will see a lot of the buildings with signs. It's gonna be fun. Okay, so I'm trying to adjust this here. I love the idea to do this live. So I want you to imagine for a second, you're driving anywhere USA, anywhere, and there is a 2-way traffic street and a standalone building. By the way, can you see the screen okay?
It's a little small, but I think so long as the words are bigger, I think it'll be good.
Okay. I can get it closer.
Yeah.
Right.
Okay.
So it's a standalone building, and let's say it has a sign that says vacant. So what happens is it used to be one single tenant, like a Starbucks or maybe a Jack in the Box or something like this. And then all of a sudden, the lease expired, they left. So what happens when it sits vacant? You can get it at a lower price because most owners of these type of single tenant buildings don't have an idea how to bring a big tenant. And most brokers, if they call a real estate broker, the broker says, well, let me go ahead and sell it for you because they're going to make a bigger commission selling it. And if the actual owner doesn't want to sell it and is not sure if they want to rent it, they put the sign that says available. I'm sure you've seen these signs, available, right? So when it's available, the broker puts the sign, says, well, if we get a buyer, we sell it. If we get a renter, we go ahead and lease it. What we do is, for many years, what made me a lot of money is I put these properties under contract. Let's say I call them up and they say, well, I want $800,000 for the sale price. And I say, well, this is sitting vacant. I'll go ahead and make you an offer of $600,000 and I'll go ahead and pay all cash. So the fact that I'm going to pay all cash, I'm going to move quickly, and it's sitting vacant, I can get a good deal. I get a contract. So I get the property under contract. So we have a contract to purchase. And now that we have the contract to buy the property, my handwriting is not the best, but I'll improve it here a little bit. I have a contract to buy the property, say for $600,000. And what I do is I start smiling and dialing. I start calling the big tenants. So I created a list of tenants. I have actually a list of over 4,000 national tenants. The biggest growth right now that's going on in the country for the last 4 years, including through COVID pandemic, has been the QSRs, which is called the quick service restaurants. So any food operation right now is making a killing. Chick-fil-A's, you can see lines, Shake Shack. Shake Shack just announced 3 days ago they have $400 million to grow. Unbelievable what's going on. Burger King, they changed their design to actually add not just one drive-through, but 2 drive-throughs in all their locations because they're doing so well in the pickup. This pandemic created a boon for these guys that are in the QSR, the quick service restaurants. So I start calling these companies, and let's say we call Subway, and Subway say, okay, I am interested in location. So by the way, when I call, I leave a message, and the message goes like this. Hi, my name is Cherif Medawar, and I have a property located at 123 El Camino Real. This property is about 2,000 square feet. It's on a busy street that has 30,000 cars per day. Please, I will send you some information by email. If you're interested, call me back. I'll follow up with you tomorrow. And I hang up and I call the next one and the next one, and the next one, and I send them some pictures and video of the place. All I need is one tenant to call me back, just one. Usually when I put it under contract, automatically in commercial real estate, you have about 45 days due diligence, which is pretty quick. You know, for apartment buildings, we get sometimes 60 or 90 days due diligence. 45 days due diligence. I don't do any due diligence. I don't bring any inspectors. I don't need to do any of that. All I do is I start smiling and dialing. And I call the tenants, call tenants until one tenant calls me back or emails me back and says, I'm interested. I need to talk more about it. And what do we talk about? They say, well, how much do you want for rent? Well, you know, I want $9,000 a month. No, we'll pay you $7,000. We settle, let's say, $8,300 a month. Let's say $8,333 a month to keep the math simple, times 12 months. That's $100,000 a year. So if I'm going to rent this at $100,000 a year to one of these national tenants, the way the lease is worked, it's called a triple net lease. If you've never heard of triple net, let me define what that is. That lease payment, the $100,000, is net of taxes, insurance, and maintenance. That means the real estate itself has property taxes, property insurance that will be paid by the tenant. I, as the owner of the property, when I buy it and I sign a lease with this Subway corporate tenant, they're going to sign for 10 to 15 years. So let's say 10 or 15 years. Triple net, that means when the property tax bill comes, I send it to them, they pay it. Then when the property insurance comes, I send it to them, and they maintain the property. Sometimes they ask me for 2-3 months free rent. Maybe they ask me to kick in some money for, like give us $50,000 in what's called tenant improvement. All this is very easily negotiated because the value of the property is going to increase once we have these tenants coming in. But one of the most important things I like about these type of tenants is when they sign the lease, minimum 10 years, they actually give me what's called the corporate guarantee. The corporate guarantee means this lease is guaranteed by the entire corporation. in all their locations. Like you got Subway has 33,000 locations nationwide. It's unbelievable. So when they sign with a corporate guarantee, the lease is signed, let's say it's 12 pages long, and there is one more page attached that says, this lease is guaranteed by the corporation publicly traded at the stock exchange with the symbol such and such, signed by the CFO or the CEO. So I will get paid no matter what, because these corporate guarantees are backed by big banks like Wells Fargo, etc. So now, when we discuss all this on the phone, which is called the LOI, letter of intent, they then send it to me and they say, here is the letter of intent. We're going to sign as Subway Corporation. We're going to sign for 10-year lease. We're going to do a triple net. We're going to give you a corporate guarantee and we're going to give you escalation. And now I have a contract to buy the property at maybe $600,000, but I have a property now that's going to produce $100,000 in income. I have an opportunity to lease to that tenant. So you can actually, I buy them cash because I have a real estate fund. So what I do is I just move in all cash, 600,000. Even if I give the tenant 50,000, I have closing costs, etc., etc. Let's say my total cost goes to 700,000. The property jumps in value. If a property produces 100,000, it will be minimum worth over $1 million. But I'm just going to say that it will be worth $1 million. So let's do the math. If I'm going to pay 600 plus whatever other expenses, 700,000 total acquisition. Are you with me? And now the property is valued at $1 million. Do I have instant increase in value? Absolutely. So what happens if you want to know, like wealth works like this. I put them under contract at this price. As soon, I only buy them, by the way, in the 45 days if a tenant is interested. They send me the letter of intent because they actually say, we like these terms, we like this traffic, we like the neighboring tenants, we want to be in this location, and we're going to give you the corporate guarantee because we need to grow. Like right now, we have a deal with McDonald's. I haven't done deals with McDonald's. I've been doing this for years. Now McDonald's is growing so much. McDonald's is telling me where they want to go. It's just unbelievable. So what happens is once we sign this deal, that a letter of intent, which is not binding, they can change their mind. But 99% of the time, once they've done their due diligence and they like it, they're going to move forward. So I go to the bank if I want to even get a loan. Let's say you don't have the cash. You can go to the bank and tell the bank, look, I got the property under contract at 700,000 and I got this big company coming in. Here's the letter of intent. Will you give me a loan? You get the loan. You may have to put 100, 200,000 down payment, but you'll get the loan. And once they're in, the first way to become wealthy is when you sign with the tenant that lease for 10 years, the value of the property immediately jumps up. You can turn around and sell it if you want. But if you wait, you have the 3% escalation. The rent every year increases by 3%. So the 100 on year one becomes 103, and then 106 plus, because it compounds on itself. And it keeps increasing. It keeps increasing every year. So what happens is you now have a debt that also keeps decreasing over time. So one deal, you end up becoming wealthy, wealthier, and wealthiest over time. And anytime 9.5 years later they want to leave, it's all right. They can leave. They have to notify me 6 months before the lease expires. And they say, okay, Cherif, we've been paying you direct deposit to your bank account. We've been paying the taxes, the insurance, the maintenance. You had nothing to worry about. We want to renew, or we don't want to renew. If they don't want to renew, I have 6 months to line up another tenant. I can line up tenants in less than 60 days. I got a whole list of tenants. I created the list. This worked in my office. I mean, we've been doing this for years. I have what square footage they want, who are the neighboring tenants they like, who to contact, the email address, where they're growing. It's just unbelievable. And what happens is 9.5 years later, if they actually say, I want to renew, I jack up the rent. I'm not going to renew 11 years from now saying that they're getting with the escalations. So every year I got 3,000 more. It's 3% increase. You're with me? So it's like almost 130,000 10 years later, because it compounds on itself. Remember, the first year is 100, but then it compounds. It's like 130. If there is inflation, I can move them to 150. And now we renew for another 10 years. These tenants don't want to leave. McDonald's likes to sign for 20-year lease. And then they take option 5, 5, 5, 5 for like 20 more. It's unbelievable. So I work once. Once I put them in, I have no marketing, I have no management, I have no headaches, and I'm free. I'm free to be in Cancun. I'm free to be in California. I'm free to come to Puerto Rico and get these buildings that are mixed use, where downstairs, I have the vacant commercial space, and upstairs I have the residential. By the way, if you're excited, you're controlling your excitement very well, I must admit. This is pretty good. But are you with me on this so far? So let's say, I don't know, 12 years later, you got one of your kids want to go to school, to college. You can refinance and cash out money. This is not so hard to do. And I'm not telling you it's going to happen every time. Let's talk about some problems. You find a property vacant, which is in any market. You can tomorrow you can drive wherever you're going to work or taking the kids somewhere, and look around, you're going to find some vacant buildings. And people say, oh my God, the economy is getting bad. This is horrible. This is an opportunity. So you can put it under contract. And when you call tenants, if not one tenant calls you back, you have it under contract for 45 days. You're under pressure, you want to perform. 44 days later, not one person calls you back. You don't have to buy it. Just call the broker and you tell the broker, thank you, this is not for me. You had the right for due diligence. You cancel and you walk away. There is no downside, none, zero. Unless you slept on it and now on the 46th day, they tell you, hey, you put some earnest money deposit, it's non-refundable. But how are you gonna miss it? You got your earnest money deposit, you're making phone calls, you're telling them about the property, you're pitching it, people call you, and all you wanna do is tell them about the place. And in today's market, they tell me about the place. When they call me back, they say things like, we did our research, the traffic is actually 36,000 cars a day. The neighboring tenant here, we know that Starbucks is selling $4 million a year in this corner. The maximum rent we're gonna pay here is $96,000. Well, just the mere fact that they called me, I know they want it. And I know I got them. And I say, I can't do it less than 105. But then, you know, if you're gonna sign for 15 years, I'm willing to go to 100 because see, I negotiate back and forth. And of course, I've been doing this for years, so it comes natural. But I've actually made millions with this. This is when Ray said I have 50 million of properties here. Right now, in the last few years, this value kept going up because what happens is as the rent increases, the value of the properties increase and the debt gets paid down. People tell me, well, aren't you afraid because the United States is printing money? I love it. I go to church, I light candles for that. Thank you, God, let there be inflation. Because when you have debt and inflation exists, you're a winner. You pray for inflation. It's a hedge against inflation. I borrow, I don't know, say I borrowed $500,000 for this deal. Guess what? Over time, the tenant is paying down my debt, but also the value of that debt is decreasing. It's decreasing in purchasing power, so the bank is losing money. I am working the system to my advantage. I don't complain. What does Biden want to do? More stimulus checks? Get them more stimulus checks. They go and buy burgers. They go and buy pizzas. It's beautiful. And actually the rent keeps increasing because there is inflation. The replacement cost of the building alone will make it double in 10, 12, 15 years. So to take that, any questions on this part before I go to the mixed use? Your silence is a sign of acceptance. I'll move forward, okay? So now, what I've done is, I have mixed use buildings. So for example, here, I am on Cristo Street. If you ever come to Old San Juan, where the cruise ships arrive, Cristo Street is the first cobblestone street in the entire Americas, okay? So this is like all history here. By the way, Old San Juan is the oldest historic zone under US flag. It's just unbelievable. I mean, literally, if I come down of my office and walk maybe 20 steps, I am in the second oldest cathedral in the New World. If I come down and go to the left and to the right, that is the oldest governor's house in operation in the Americas. It's this unbelievable area. Just being here, I feel it's spiritual space, right? But listen to this. So down here across, it's called 65 Fortaleza corner with Cristo Street. There is a building that downstairs had commercial space and upstairs has 12 apartments. I bought it from a jeweler who actually had his jewelry place downstairs many, many years ago. I mean, These are buildings that are historic buildings. You renovate them, make them look nice, etc., and then you make it happen. And then he was renting half the apartment, 6 of the 12 apartments upstairs to his staff. The manager of one of the stores in the mall, the manager here, manager there. So he was not getting maximum rent. And I called him one time and I said, listen, if you want to sell it, I'm interested. We chatted. He wasn't interested at the time. Lo and behold, a few years later, he called me up. He said he's sick. He wants to sell. I take the whole building, no negotiation. This is the price. I took the building. Downstairs, I put a company called Anita Gelato. You can look it up. This company has about 70 locations worldwide. They're from Israel originally. And they pay me downstairs $10,000 a month. There is COVID-19 and all this stuff, people standing in line. It's dark here right now. I wish if it wasn't dark, I swear I would unplug the thing and I'll take you out to see. People stand in line to go to this gelato place. It's so delicious, so unbelievable. And upstairs, the 12 units that I took, I changed them all from long-term rent to Airbnb. Well, I changed 10 of them, not all of them. 10 Airbnb, so I furnished them, made them look nice, upgraded the kitchen, made it look really nice. 2, they're long-term. They're just nice people, and once their lease expires, eventually we'll just work something out for them to leave. So the property has this steady income downstairs, and it's got the actual rental residential upstairs. When COVID-19 hit, the cruise business stopped. So there's no more cruises coming. But it doesn't matter, I have corporate guarantees. Number 1. Number 2, all the residential is sold out. Try to book, go on Airbnb and put Old San Juan, Puerto Rico. Go on Airbnb and put Miami or Key West. It's like crazy busy. So I ended up making a lot more money from upstairs, and I have the steady income from downstairs. Now you may have a question, if you get a mixed-use building with the FHA and with agency, would you be able to get these good loans that are low interest rate, longer terms, etc.? Yes, you can, so long as the actual commercial space does not contribute more than 40% from the whole income. So I make sure it doesn't. And that's how I work it. The other thing is people say, well, how about if I'm going to get a loan for an apartment building, you made it Airbnb, will you be able to get the loan? Well, I sometimes can do a company that I'm leasing to a company and give them the right to sublease to the Airbnb. So I create these other companies and I disclose it, and they're okay with that. So long as you disclose everything in writing, no games, no gimmicks, everything is clear, everything is clean, and you can play the game for a long, long time. All right, I'm open for questions. I did it in 20 minutes.
So quick question on what you just said. I want to make sure I understood it. You actually can you can rent these to a company who can then sublease it as an Airbnb, and the advantage of doing that versus just straight as Airbnb is what?
The advantage is often the lender says, I don't know how to assess the value of this Airbnb. I don't know how to look up the numbers. It looks like you're making $8,000 on a 3-bedroom. That's just a lot of money. And I say, okay, we're making $8,000 because we're renting it nightly. I got 20% commissions, so that's $1,600 already gone. I'm paying the utilities, that's another $500, and I got another $1,000 for cleaning and etc. So it's really making $5,000. Long-term rent would have been $3,500, but I'm making $5,000. So they say, well, we don't understand all this, and it's confusing. How can we track it? And we don't even know. So what I do is I create separate entities, and then I lease to the separate entity the $5,000. That entity makes $8,000, and I show them, this is the steady income I'm getting from a long-term lease. But that long-term tenant is a company I own and has the right to sublease, but that income goes to that entity. So don't worry about that entity, and here are the numbers that I receive every month. And once that is seasoned for at least 6 months, they're good with the numbers. You can even find people to, I started that by having people, a guy came to me and he said, Cherif, can I lease from you? But when I travel, I would like to have the right to sublease it nightly. And I said, go ahead, don't worry. He's a good guy. And he said to me, look, I will furnish it and I'll leave the furniture for you after 2 years when I'm gone. So I said, there's no downside. I'm getting the lease. When he's out of town, some other people are paying him and he's paying me still the lease, and he's going to leave me the furniture. And it was pretty nice furniture that he showed me the pictures he was going to buy, and we put it in the lease. Well, next thing you know, I realized he's making a lot of money. So when his lease expired, I took it over and I tested it. It was an amazing profit. It's not always the case, by the way. Some Airbnbs are a waste of time, and it depends on locations. So I like smaller apartment buildings that are mixed use with commercial, that steady income when I bring a big national tenant. And then I look for these destination locations so I can actually get a property. I mean, literally, I bought the property at $2.5 million. It's 12 units with the commercial downstairs. I have offers right now at $7.5 million. And I won't sell it. It's cash cow. I already refinanced, cashed out more than I put in. So not only do I have all my money back, but I got paid to own it. And what did I do? Bought another one. Bought more deal single tenant. So the deals structure themselves. If you actually have something steady income here with a corporate guarantee, it makes a huge difference. And how many deals do you need like this, really? One. You need one Subway with the corporate guarantee. You need one Starbucks. And you can try all year, put them under contract, keep calling and doing this. And if you have to cancel 3 times, but you hit one, that deal is going to keep paying you for 10 years. You can pass on that deal to your kids. I have a friend of mine, his kid, he's got issues. Okay, let's just say the kid is not able to function normally. It's very sad for the guy. And he said to me, look, I got the money. I got this building. It's in Utah, and it just got a lot of moving parts. I don't know what to give the kid if something happens to me. I said, let's go do one of these. He came in. I showed him how, step by step. And now he's got one. He's going to sell the building he has. He's going to get another one like this because they're triple net. There's nothing for the kid to manage. They're going to be 20 years. The other one is actually a Burger King. They're going to sign 18 years. It's kind of unusual, but that's the way it worked. And the kid is going to get this money in a trust account, and he's going to get paid. So it's not like you have to have high IQ and you have to have a lot of moving. There's no marketing. There's no management in these, nothing. If you like to do some of this, you can even assign that stuff like Airbnb. There are some people that will manage the Airbnb for you. So that's the mixed use that I wanted to talk about. Other questions?
Is that 40% is the actual income? It doesn't have to do with square footage. Is that correct?
That's correct. You're correct. The square footage comes to play when I give you an example. I had a dentist who said to me, I was doing a presentation and he came to me, he said, oh my God, I'm the one paying triple net to the people that own the building. I'm a dentist. I came in, I fixed the whole place for $100,000. I signed a long-term lease. I've been paying. My lease is coming for renewal and they're jacking it up. They say, I'm doing so well. He said, what should I do? I said, well, go buy your own building. He said, I don't have a 30% down payment. So anyway, conclusion, he did the following. He got a building. It was a standalone, but actually it was not a single tenant building. It was 2 tenants. And what we did is he split the space and he put enterprise rent-a-car on one side and the other side was his dental office. And he got an SBA loan. So for the SBA loan, the SBA people came and measured the space. They found out that enterprise rent-a-car had 60% space, 60% of the square footage. Are you with me? Let's say it was 10,000 square feet. They had 6,000. So they said, no, you have to have at least 50%. So he made a deal with enterprise, moved the wall, dropped the rent a little bit, gave him a couple more parking spaces, and he was able to get the SBA loan. That was the best deal he did. He did the whole thing. He structured it and took his wife and his son and he wanted to take his son to Singapore to go to college. He didn't want him to go to college in the US. I don't know why. People come from all over the world to go to college in the US. But anyway, he was able to set up this, and that's his retirement. He told me he's going to sell eventually the dental office, and the income from both is going to be his retirement. He could have been still working on teeth for the rest of his life. Questions?
Hey, Cherif, that's actually what I'm trying to do. I bought a franchise and I'm trying to do this 504 loan. It seems to me, you tell me, sir, that where I'm going is a place called St. John's County, and there's a lot of just land there. So there's a lot of ground up builds. And that's kind of where I'm having difficulty getting this loan. It's going to be like 1.3 to buy it. but there's another area called St. Augustine that has a lot of development already. It seems to me like this standalone play is for these developed areas as opposed to the newer kind of ground up stuff that you'll see in some parts of Florida. Is that correct, or am I wrong?
You are correct. As a matter of fact, one of the criteria I had mentioned, maybe I said it very quickly, is the tenant, when you're calling, let's say calling Chick-fil-A. Chick-fil-A's first question is going to be, who are the neighboring tenants? If you tell them this is an up and coming area, they're going to tell you, wait till it is up and it's coming. We don't want to be leader in the location. We want to be there when the other leaders come in. Now, who would come in? It would be somebody like Starbucks. And then Starbucks will say, listen, if I'm leading the way and you're going to piggyback on me, I'm not going to pay you the $100,000 a year. I'm paying you 60. And you know what? I want 6 months rent. I want the right to cancel the lease after, let's say, the 6th year, if I don't get total sales of X, because I can only wait so long. So it's all a matter of negotiation, but you're dealing with big companies where you work once and you can get paid for a long time. And once they like the location, they're not going to nickel and dime you.
Thank you, sir.
Sure.
Cherif,
So, Sheriff, are you calling the corporate real estate, the real estate branch of the corporate office?
Yes, yes.
Okay.
I'm giving you something I train people for it a whole day. I'm giving it to you in 20, 30 minutes, but to give you the answer, yes. We call the corporate offices of these companies. We tell them a specific spiel. We present certain information. It's like a checklist that they want to see. Just think of it this way. These companies are used to dealing with mall representatives. And mall representatives say, you're going to be in this location, this is square footage, this is the as-built, this is how it looks like, we want so much per square foot, etc. So it is a lingo for it. Like when people step into our world of real estate, if they don't know the lingo, I mean, that jeweler, I bought the building from him, 2.5 million. He was so happy to sell it. But if I step in his jewelry business, in his business, he will eat me alive. I don't know. I mean, he made millions in jewelry. He was one of the biggest guys in the area here and in St. Thomas. I don't know anything about jewelry. You see me wearing watches? Nothing. So once you know the lingo of this retail, of the mixed use and all this, you're able to converse and able to get what they want and work it like a checklist. And if it checks, you get it. If not, you walk away. There's no downside.
Yeah.
And due diligence I don't do any due diligence in these buildings. You know who does the due diligence? When we agree on the letter of intent and they send a representative for one day, the guy walks in or the lady walks in, they take pictures, they measure some things, they say, okay, we're gonna need all new ceiling here, we're gonna need new flooring, and we need a new AC. And then the corporate office follows up, okay, look, we told you we're interested, the LOI, we're not gonna sign the lease unless you give us back, give us a credit of $40,000 for this and that. And at this point, if your property is going up $300,000 to $500,000, negotiate the $40,000, the $30,000. And I tell you, in the beginning, I used to flip a lot of these, and I still flip a lot of these. And quite often, I've done what joint ventures, where people would say, I have it, I can't buy it, but I have it all lined up. And I say, okay, it's now 700,000. It's going to go up to $1 million. So you lined up all the pieces. On that upside is 300,000. My fund will buy it. And I give them like 30,000. I give them 10% of the upside to 25% of the upside based on how many years were signed. So there are many parts to it. You can work partnerships on these. But for your purpose, as I understand the group with the leadership of Ray loves the idea of the mixed use a little bit because it adds that boost of extra income. Am I right, Ray?
absolutely. One thing that I think would be good to also mention is some of the tax benefits. I know that we talk a lot about the tax benefits in general when we talk about multifamily, but you layer on some additional incentives and it can be a real sweet deal.
Yes. So in Puerto Rico, people say to me, how come you're doing this in California, you're doing these deals all over the country, but you're based in Puerto Rico? What is that all about? Well, I don't know if you're aware, Puerto Rico, as part of the U.S. possession, it's U.S. territory. It's U.S. Like when you land here, there's no passport, there's nothing. You walk in, it's like Miami. Actually, when you're landing and you look down in San Juan, it's so big, huge buildings. I mean, you think you're landing in Houston or something. But the beauty is, they created tax incentives here. And the tax incentives can drop your taxes to less than 15%. So listen to this. When I get I get a deal like this, and I get it under contract, and I do the whole thing, it's gonna cost me 700. And I'm gonna turn around and it's gonna be worth $1 million. I can flip it right away. That's 300,000 profit. Let's say I even have closing costs or commissions to somebody, I net 250. That's back to back in like 90 days. 250,000 in California. I know Florida has only state tax. In California, you pay federal and state. You will be at 50%, if not more, taxes. And Biden, in a few months, is going to make it even 60% tax. You will see, it's coming. But came here and I took residence in 2000. I came in 2000. It was 2003. So I took residence in 2004. And what happens is, I made my headquarters in Puerto Rico. I just showed you my office. And what I can do is I invoice my company and my real estate fund over in California, so the money can legally come here because I am here. I have 2 attorneys full-time in-house, 2 CPAs, a construction crew, a property manager who is my brother-in-law. But the key thing is the money now comes to Puerto Rico. By the way, does the federal US mind? They don't mind. This is money going from one pocket into the other. And they want the money to come here. That's why they created tax incentives. And they say, hey, if you export services, you bring money here, you're going to pay less taxes because they want more money to come here. Less aid money to come from Congress. So what happens is I do the transaction, and instead of paying 50% taxes, I pay 15% taxes, or sometimes even less. So what I do on every million, instead of giving the government $500,000, I legally give the government 150. What do I do with the extra 350 profit? What do you think? I'll give you 3 choices. I buy stocks, I buy crypto, I go gambling, or I do more real estate. The answer is clear. I do more real estate. By the way, I gotta tell you, one of the deals I had here in right down the street at 250 Cristo it's a small hotel, 9 suites. And this guy came in, he said, I want to buy it from you. I'm staying there. How much do you want? And I said, I want $5 million. Because I didn't want to sell it. He said, I'll give you $4.8 million. But give me just a few months to buy it. I look at the guy, he's wearing a hat. He looks weird. I said, okay, may I ask you your name? He said, Brock Pierce. Anybody here heard of Brock Pierce? Well, Brock Pierce, according to Forbes magazine, is the 8th wealthiest guy in Bitcoin and crypto. Well, I didn't know. I don't know anything about Bitcoin. Make a long story short, he came back to buy it. He said, Cherif, I'll give you 5.2 million. This is March 5th last year. I'll give you 5.2 million. Will you take Bitcoin? Bitcoin was at 7,000 at the time. I said, sir, I don't know anything about Bitcoin. And I made a joke, in God we trust. And I'm taking the money, and God we trust. Look at it. And he's looking at me, and he's got other people around him. They're like, okay, I signed. I ran into him the other day. He said, Cherif, do you realize you would have walked away with over $30 million instead of the meager 4.8 million you made? I'm like, oh my God. So sometimes I think I'm smart about something, and I look back, I say, wow, I don't even know what's out there, man, in the world. But this has worked for me. It changed my life. And it's something I can teach my kids. My kids are young. My daughter just turned 15. My son is 13 and a half. And they get it. Like I took them with me in one-day training. I got them to sit down and I kept asking them questions. They got it. Now when we go to the mall, they say, hey, Juicy Couture, do you think they want it? I said, no, forget retailers. Let's stick with the food people. The food people are growing. I'll show you what, since we're together on this. For example, the latest photo Burger King sent me about the new concept they have. Okay, just look at this. I'll put it to the screen here. You see how they have now? You see how the drive-through, they're gonna have 2 drive-throughs. You see that? You see how the concept is gonna change completely because they realize that food delivery is making them so much profit. So they're gonna look at these standalone buildings. They're gonna tell you, we want it. We're gonna start paying rent in 6 months. Okay, I'll give you 6 months. And then they're gonna improve the building that we have. They're gonna add extra square footage here. They're gonna change the configuration, and they're gonna sign longer because they wanna amortize their cost. How would you like to work once and get paid for 15, 20 years? That's what happened to me. And that's why I ended up in Cancun, spending a lot of my time where I can go and I can tell my kids, hey, let's go play some volleyball while the properties are still performing. And here, for instance, with all the kids playing volleyball, not all my kids, this is my daughter here, but you get to spend time. We bought part of a hotel in Cancun. I don't invest outside the US, but this was an opportunity I couldn't pass on. Okay, more questions. I know what's gonna happen to you tomorrow. When you start driving, you're gonna start noticing now single tenant buildings. Like, what the heck? I had a call on this one. What do I do with this one? Look at them in a building, even if the building has just one, like I have a couple of properties here where it's just one residential upstairs and one commercial downstairs. And a lot of people are moving to Puerto Rico since Biden became president. So they call me and they say, I came to visit Puerto Rico because I want to move because I'm paying a lot of taxes and they raise my taxes. I'm an entrepreneur. I have a factory or I'm having this and I'm moving to Puerto Rico. It's a beautiful place here. We love Old San Juan, but we're looking for an apartment. And I start explaining to them, you don't want just an apartment. You want to live upstairs and you want to rent a commercial because it's going to help you. No, I can't afford the building for 1.5 million. Sir, ma'am, please let me explain. Let me explain to you. The income downstairs is 5,000, which is going to pay about $1 million. So it's like you're paying less for the apartment. You got a bigger apartment. They're like, come again? That's why your name is all over the place here. Come to my office. Let me explain to you. When I'm here, it's easy. When I'm not here, I explain it over the phone. It's some people don't get it, by the way. Some people are my wife said, I got to get an apartment. I'm getting an apartment. And you know, that's what it is. Okay, other questions?
I have a quick question. I guess about the environment, the investing in Puerto Rico. Like, how is that? Is there any additional red tape involved with investing there other than the tax advantages that you pointed out? Is there anything negative or different in investing in mixed-use properties there as opposed to here in the mainland?
Yes. What a great question, Marilyn. It's very difficult here. I'm not going to lie to you. It's a very, very, very difficult process. Okay. As a matter of fact, the more difficult it is, the better off we are. Because if it was easy, everybody would be competing with me. So once you crack the code, it's easier for you, but it's tougher for others. I give you an example. You go to get the permit to do, like I wanted to expand one apartment, had so much space, but it was 1 bedroom, 1 bath, but it was huge. And the ceilings here, I don't know if you could see, the ceilings here are very, very high. Okay, wait, like right here, let me. Oh, well, you can see it from here, right? Ceiling is very high. You see from floor to ceiling, see how high? Huge. You can actually do a mezzanine. So with this apartment, I wanted to make it a 2 bedroom, 2 bath. I figured I'll spend about 50,000. The value is going to go up 150,000. You see, to get the permit, it took us 5 months. And they know me and they're nice to me. 5 months. To do the work that was supposed to cost 50,000 cost me 71,000. 40% higher. Why? Some people didn't show up. Some guy got married. Some guy, I don't know, had whatever. People fantasize problems. It's hot. It's not easy for somebody to put a full day of work. It's very hot in the summer. So you have all these challenges. But you know what? No place is perfect. I'm in California and we were doing some work and the neighbors started complaining. It's a $5 million home. I'm adding square footage. It's going to sell at $8 million. You would think the neighbor would be happy. I'm going to increase the value of his home. He started fighting me. He wants to sue. No place is perfect. And if you take it as a game and you don't stress out and you deal with people with respect and patience and a little bit of a sense of urgency, like you make yourself patient, but you make them have some sense of urgency, you will accomplish magic. The beauty about life is whatever we do has a compounding effect over time. What I mean is that property now that cost me 71 gone up to 150 and now it's worth even more because we made it Airbnb and it's performing more. And the compounding effect is in 2 ways. This compounds up and the actual decrease of debt compounds down because it devalues in amount and in value. With $500,000 5 years ago, I cannot buy the same thing right now for $500,000. So owing $500,000 is a great way to becoming wealthy. As a matter of fact, becoming wealthy is a formula based on who pays my debt. If the tenant is paying my debt, I'm becoming wealthy by doing nothing. I got 30 buildings here. You can go to a website, crepr.com. Check it out, crepr.com. You're gonna see my 30 buildings. And you're gonna see how beautiful they are. You can click, you see the videos, you see Old San Juan, you see the beauty. And I'm proud of this. I put love and money. And you don't have to have so many buildings, just one. And in that one, it becomes your masterpiece. You get the permit, you get the right tenant downstairs, you get a good tenant upstairs. Now, speaking of getting tenants, did I answer your question? Okay. Speaking of tenants, sometimes you get franchisees calling you, telling you, I'm a franchisee, I got the license to operate under, let's say, Burger King, and I want to open the space. I am fine with anybody coming as long as the big corporation is going to give me the corporate guarantee. Because the corporate guarantee makes the value of the property go crazy. People will pay you cash, will close quickly. You can put them by yourself online, say for sale by owner, single tenant building that has Burger King, corporate guarantee. People, you won't even, the brokers will be calling you. I got 2 clients. I got people from a 1031 exchange, they want to retire, they don't want to manage anything. So we want corporate guarantee, which is, it's the harder part because you got to deal with corporate offices, know what to tell them, etc.
Are you able to sell under a corporate guarantee?
Yeah, when you sell it, the corporate guarantee is for the lease. That means that lease is guaranteed by the corporation itself. So when I sell, I'm selling the building with the lease. So I'm selling a cash flowing entity with a lease that has a corporate guarantee. And what we do is just, we send the tenant in an addendum saying the new company that purchased is, let's say, Reyes LLC. So please make your future payments to Reyes LLC, and Reyes LLC bank account is this, because they wire you the money monthly. Like I have Sunglass Hut downstairs where I am. Sunglass Hut, they've been with me 16 years. And they wire the money in. By the way, Sunglass Hut is part of LensCrafters, plus of Luxottica, one of the biggest companies. Their corporate guarantee is $1 billion. Cruises, no cruises, terrorist attack, the world shut down, they're paying. They have never missed a payment. You should see how beautiful they remodeled the building downstairs. My point is, they wire the money. If I sell the building, they're gonna wire it to somebody else. And that person gets the corporate guarantee. What if people say, I have a corporate guarantee, I'm not paying you? Very easy. You just send a demand letter to the bank that is the bank for the corporate guarantee letter, and I get paid. It happened in 2009. I had a company here called Puma, and Puma said, oh my God, we have a problem because in the mall we signed, we're not gonna open another place. We didn't realize that, and we needed to open, and now we opened with you, what do we do? I said, you got 9 years left on the lease. And they were paying $20,000 a month. That's $240,000. He said, you wanna leave? You buy the lease, or you sublease to somebody else with equal financial power. What? They paid me $1 million to cash out, and I put Crocs.
Okay.
The downside is an upside.
It's amazing.
I have a question. So is it easier to deal with corporations and governments and dealing with corporations, like from start to finish? Like, what's your average time?
Okay,
to close
so
the deal?
it's easier to deal with corporations, generally speaking, because if they like the space, they're very organized. They know they send a designer to take a look at the space, then they sign the lease. As soon as you show them that the property is under your name or your entity's name, then they come in, they have their construction crew, they have their specs, what they need to do, and then they start operating, and you don't even need to go in the space. They just send you the check automatically. When you deal with individuals, there is always some drama. Well, I was coming, but I missed the flight. My husband is sick. My husband is coming tomorrow, but he's gonna pay you the late fee, don't worry about it. Can you not charge me the late fee? And so, with corporation, you're dealing with a contract. Yes, there's still people, and I try to keep a positive relationship, but corporation is easier once they decide they wanna come in. The bureaucratic part is they have to have committees and meetings. So if the place is not presentable, and if it's not the right criteria, like I look for 15 criteria for a building. I look for exactly a checklist to send them the information. And once we do that, we make their decision easy because they have to present it to a committee. But once they say, yes, we like it, it's smooth sailing for the next 10 years. With a With an individual, if it's a franchisee, let's say you want to get it and put a small tenant, they may make a decision a bit quicker, but then 2 years later, something can happen in their life. You know, like when we have apartment buildings, I got a lady, she transferred and then she just told me she wants to leave. I don't have a problem because I can rent it for more, but their life changes. A big corporation, they want to leave, you're going to pay. You got 6 years left. You got 2 years left. They can't just leave. Regarding governments, it all depends on what you're dealing with governments on. Governments, it's all paperwork. Form 594 for this, Form 101. Oh, you filled out the wrong form for the wrong part? Sorry, your deal is now delayed 4 months. If anybody's VA here, or you know what's going on, right? I rented to some major guy from the Navy, and he came in. The apartment was for rent at $3,500. He called through a broker. The broker called me and said to me, now she saw the advertisement. She said to me, can I see the apartment? I said, okay. I was here. I don't usually show apartments, but I was here and we had just remodeled it. So I said, I'm gonna go take a look. Let's walk together. So she said, I'm down the street, I'll be there. I walked in, she looked, and she said, sir, they're approved for $4,500 a month. In other words, she said to me, we're gonna pay you $1,000 more a month. What are you gonna do as a landlord? Say, no, please, I don't wanna take more than $3,500. I said, beautiful, $4,500 it is. What do they need? Oh, they need parking space. I'll give them my parking space in the car. I'm selling the car. Beautiful, I don't need the car, and for $1,000 more, what you want to buy my shirt? Take it. So my point is, sometimes the government works in strange ways. I mean, they tell you, okay, I'm willing to pay this, you know. So I find that it's worth it for me, from my point of view on these. It's a lot more worth it to work with big corporations, provided you know what you're doing, because they'll shut you down right away if they feel the conversation is not going the way they want to, because they're used to dealing with malls where it's very, very systematic, etc. Cool. Other questions?
Cherif, we went over on time, but if you've got a few more minutes, I do want to leave you a little time to tell people where they can find out more, because I know there's some interest, and I know we're going to see, some people are going to see this in YouTube and other places. So,
okay,
you know, I put the CREPR.com link on there, but I know you have some other stuff as well.
Okay, here is the best person that can handle this. Ashley has been with me since 2003. Ashley at CMREI.com. Ashley, you can ask Ashley about the trainings I do, how we do I do the trainings myself. I don't delegate this to anybody. So Ashley is with an EE, not EY. ASHLEE. She's my VP. She is my right-hand person. She handles, her office is in Orlando. This is where our headquarters for the education company. I've been doing education for 22 years. I started in January 6, 1998. I'll never forget that. And did my first event. And this is one of the most successful programs we have, because I tell people, listen, if you don't have the money to buy them, don't worry. I'll train you how to find them. I'll give you the tenant list. I'll give you the proof of fund. Like when you call a broker, you say, hi, I am John Doe. I'm Susie Johnson, and I'm interested in this building. How much do you want? And there is a formula I will give you exactly which building we want, how much to offer for the price. You send them the proof of fund from my fund, which I have millions sitting at any one time. Here, we have $2-3 million sitting. We're gonna pay you cash. We need this under contract at this price. Based on the price, we tell you. Do you think the broker is gonna take you seriously? In a heartbeat. You turn the conversation, you intimidate them. My fund has been up and running for over 11 years. They can check it out online, makesif.com, sfifund.com. They can see with the SEC what we've done, over 100 million transactions successfully. Not one, we never lost in one. And then the broker says, okay, we'll put it for you under contract. Let me call the owner. And then you got the tenant list. I give you 4,500 tenants, who to contact, what to say exactly, step by step. And you keep smiling and dialing. All we need is one. When that tenant calls you, you email it to me, we get on a conference call. And we do it right then and then, and I close them. And then when the deal is closed, on that upside, I pay you 10%. It's an assignment fee. You don't have to be a broker. You don't have to be anything. It's a marketing fee. You get an assignment fee. The example I gave you, from 700 to 1 million, that's 300,000 upside, you get $30,000 for making phone calls. You don't have to go anywhere. You don't have to do due diligence. You have no downside. So Ashley will explain it in more details. And I do the trainings either on Zoom, people attend, but I actually invite people to fly to Puerto Rico, and I come once a month and I get a group of 5 people at a time. We limit by market in the United States how many people we have, because the most important thing for me is to make the deals, not to do the trainings. I got to make the deals, because money sits costs me money. Money deployed is huge returns. I have investors that say, you know what? I don't want to go find these deals in my backyard. I don't want to make phone calls. That's too annoying for me. I don't want to do all this. They just invest in the fund. But the investment in the fund is passive income. You guys are active people. If you want to do something like this with the blessing of Ray, I'm happy to help. And hopefully, Ray, you can come when we do the training. You'll be here in your hometown, man. We can have lunch or something.
It's a write-off, man. I think I may.
Okay, good.
I'm ready. Let's go.
So please, when you email Ashley, just say, thank you. Just say, I was with Ray and Cherif on the call. I want to know more about the joint venture. It's called JV Partnership. By the way, I want you to know, when we sign them up for 15-year leases, you get paid 25% on the upside. That's $75,000 for making a few phone calls. And I'm the one buying them all cash. You get paid right there in escrow. I have to close in escrow. You go on the settlement statement and it shows marketing fee and your name. Some people tell me, can you pay me outside escrow? I can't do that. I'm a real estate fund, you guys know, and come on. Okay, so that's the way it's done. You can, like Ray said, you can look on YouTube. You will see success stories. We have thousands of success stories. I've been doing this for so long. It changed my life. Here in Old San Juan, when I came in and I realized the cruise is docked over here, and people get off the cruise ship with the credit card at hand, trying to shop, I said to myself, oh my God, this is paradise. This is the promised land. I started taking places, remodeling. I put Tommy Hilfiger. I put Burberry. I put Sunglass Hut. I put Guess Jeans. I put Coach. You know how much Coach pays me? I'll show you the check if I can pull the check. $28,000 a month. You can live for the rest of your life on one building. It brings tears to my eyes. So this is I was going to show you. Let me see if I have the check here. Just so you can see for yourself, so you don't say, well, this guy's telling us a story. I can't. Well, when you come to the trainings, I show you the actual, I show you like when Puma canceled with me, how we did that. I show you some details of how we write the LOIs, give you samples of the LOIs, give you a sample of the actual lease agreement. The lease agreement that I write with these tenants is cost me over $8,000, just to give you an idea of how we lock them in, give them what they want, get what we want. They don't want to give me what we agreed on, they're publicly traded. They can print a few more shares and pay me cash. Maybe they can pay me in Bitcoin in the future, I don't know. No, I don't take Bitcoin. All right, any other questions?
I just quickly wanted to know how long the due diligence for the corporate entities are. Is it a week? Is it a day?
No, great question. So let's say it's the 30th day and you've been smiling and dialing, and finally they call you back or email you back and say, we need to get on a call to discuss more details. You're with me on this? So you're going to forward the email to me and you're going to say, Cherif, this company is ready for the location we discussed, because there are steps where you communicate with me. So then we'll get on the call with them. We discuss the details. They already did their due diligence before they email you and say, we're interested. What's their due diligence? What's the most important thing for them? Can you guess?
Oh, number of cars.
You're right. Traffic. All they want to know is traffic. So once they like traffic, they look at neighboring tenants. So those are two top things for them. Once they have this, now they want to discuss the LOI. And that's where they are experts. But I've been in the business so long, I've done millions in transactions. I know how to work with them. I give you this, we take that. Okay, you get so many years. Okay, I give you this, I drop this, I increase that. Okay, we'll do the work for you here and there. And we negotiate this deal. It's a phone call. After the phone call, they want to do what's called the site review. So within 48 hours, usually, sometimes the next day, it depends on the location. If they have like a big mall close by, there's the director of operations coming the next day. Sometimes within 72 hours. I hate it when they take like a week or something, because we are on a time table, and sometimes it's the 45th day and we're like hot and bothered because they have the designer person, the person who's going to come and approve the final site survey is not available yet for whatever. It happens once in a blue moon. But if we do, that's when I step in and call the broker and say, I'm going to give you money and we're going to extend the time. And now it becomes the earnest money deposit, you put it. You usually put only $5,000 that's refundable. Is that clear? Can I hear a yes?
Yes.
Yes, sir.
Thank you. Because I had somebody said, I didn't know I have to put any money. Well, just to lock in the deal, you have to put the 5,000. It's not at risk. It's fully refundable. And if you don't have it, this is not for you, believe me, okay? But once the deal is gonna be, if the deal is not done, you cancel it, you get the 5,000. If the deal is gonna be done because we lined up everything, I move in and I put what they usually like on the 46th day for us to increase the deposit. So let's say they want an extra 30,000. I then put 30 and send you the 5. Are you with me on this? Because then you don't have any money in the deal and we're closing, and I take 45 days and then we do what's called 15 days to close. So 45 days due diligence, 15 days to close. Once we know that they're coming, if we need a little bit more time, I move in and I put the money, get your 5 out, and then we do what's called the environmental report and a couple other reports that I run, and then we close all cash. There's always the cash that we wire in, and once the cash comes in, whatever deal worked with them, we start the paperwork for the lease. I have my company, the attorneys, it's practically now a template that we use with the slight negotiations we worked on. And you know, every deal has its own life. Now, I'm not telling you, I want a disclaimer here, that every deal you're gonna put under contract is gonna be closed. It's not gonna happen. Sometimes you have to put 2, 3. There is a degree of luck. I had a lady with me in Las Vegas, she put first deal she put under contract. It was smooth sailing. I mean, it doesn't happen every time, but it happens. I have some other people try 2, 3 times. They're working in New York. It's a little bit tougher market, but the upside is huge. Because tenants call you back. They're interested in New York, Los Angeles. They love Orlando. They love Miami. Miami's on fire. Tampa. Fort Lauderdale, we did a deal on State Road 84. I don't know if you know Fort Lauderdale. The deal before COVID-19, they wanted $1.2 million. COVID-19 hit. I emailed my student joint venture partner. I said, go ahead and call them again. He said, what offer should I make him? I said, no, I leave it up to you. You've seen the space. But lowballed them. He lowballed them 800,000. They accepted 850. This is unbelievable. Now they regret it, of course, because they saw what happened and the market just took up. But anyway, so that's really the summary. And thank you, Ray, for giving me the opportunity to speak to your people. And let's make it happen. Again, if you're interested to reach out to know more, talk to Ashley at cmrei.com, which is Cherif Medawar Real Estate Investing.com. And look me up on YouTube. And now when you look me up on YouTube, hopefully you will see Ray and Cherif Medawar.
Cherif, this has been fantastic, man. I really appreciate it. I love the energy you bring to this. I tell you, if people are interested in multifamily, the one thing that I know about people that do multifamily, they also need some sort of other income. And what a beautiful way to bring in income than doing this, right? It's a fix and flip of some sort, but this is actually dealing with, like you said, corporate, which is a lot better than trying to fix and flip houses, in my opinion, my humble opinion. But so this has been fantastic. I'm going to just one quick note before, Cherif, I let you go, so the group can be tracking. Next event or the next meetup is going to be on the 21st of June. I have George Abreu that's going to come talk about due diligence and CapEx estimates for a multifamily. So Cherif, again, thank you very much.
Thank you. Okay, I'll let you go now.
Yeah, absolutely.